Hi everyone, in today's episode we're going to go over ETFs, which stand for Exchange Traded Funds. ETFs are a lot like mutual funds. Inside these funds there can be, let's say 100 different stock inside of it that are actively managed on your behalf to make a portfolio for you. They can be bonds in there, it just depends on what your goals are, but they are a lot like mutual funds. And I want to kind of have a little bit of a compare and contrast with them because that's the best way to explain the differences. So if you go down to here and we look at mutual funds and ETFs, mutual funds are a little more actively managed. You're basically paying individuals to manage your money that will try to do the best they can to buy these stocks or bonds to make you a decent amount of money. So that can be if you think a stock's way overvalued, they'll sell it. If they think a stock's going to do very well, they'll buy it for you. An ETF is a little more passively managed, okay? They may not do as many trades for you. Why? Because sometimes you pay for what you get. A lot of times they have lower fees. They're going to buy a portfolio for you and you're basically going to invest it for long term. And a lot of times that actually can outperform for you depending on how the market is doing. But sometimes you do pay for what you get because sometimes the actively managed funds can outperform, but not always. How does it trade? So a mutual fund will trade, basically let's say you want to buy a share of a mutual fund and let's say you want to buy it in the middle of the day. It doesn't matter when you buy it. At the end of the day, that's when you actually buy it. It actually, whatever the stocks are worth at that point in time is when you purchase it. Just like if you want to sell that particular those shares of mutual funds, let's say it's at 9:30, 1 o'clock, 3 o'clock, it doesn't matter. Well, all that matters is what these investments are worth at the end of the day. Versus an ETF. An exchange traded fund will trade throughout the entire day. So if you buy it at 10 o'clock, you can actually sell it at 3 o'clock. Trade throughout the entire day. It's just a little different way of doing it, but I think that's important, especially if you're trying to really work your money sometimes. They're also a little more tax efficient than mutual funds, just by nature of how they work, because you're not doing a lot of buying and selling. The manager isn't, especially if the fund has made a lot of money for you. By them actively managing it and buying and selling, a lot of times that can generate a lot of taxable gains. So if it's a taxable account, ETFs might be a better option. The bigger thing is you should probably consult someone like myself or any other financial advisor to see what makes the most sense for you. But that's generally an exchange traded fund is a mutual fund that trades throughout the day, and sometimes they cost a little bit less. Hey guys, thanks for taking the time to watch that video. If you like what you see, make sure to like, comment, and subscribe. If there's anything you want to see in future videos, make sure to put it in the comments section and we'll try to get to it as soon as we can. But thanks for taking your time out of your day and don't forget to subscribe.